For more on this, Dan McClory, our good friend and managing director, head of Boustead Securities for China. Thank you so much for joining us. Good to see you. Look, I wanted to throw up today when I saw these numbers, because this market has done this to us a number of times, where you think it's going to get better and then bam, it gets worse. We're going to get better and it gets worse. And Powell already told us about the pain. Remember the pain? I guess this is part of the pain. What's your take on these numbers today?
Well, I think it's some unanticipated pain. It certainly was not expected that all those other categories of goods, such as shelter and food and medical, were going to shoot up. We thought it was concentrated around fuel and things of that nature, Phil. So, yeah, people got ready when Powell delivered those comments a couple of weeks ago for the pain, but it's coming in a totally different way.
Everywhere that I go, Dan, everywhere, small companies, big companies, I see people raising prices in almost everything. And they're playing actually catch up, because you know what their excuse is? Well, Dan's steakhouse raised their prices, so I'm going to raise my prices. Dan's store raised their prices, so you see how we're all following along each other. When is this going to stop in terms of the raising of prices among the entire chain of command in the United States commerce market?
I guess when people stop buying things and spending money as a result of just being completely put off by those surcharges, and they are bold and they are excessive and they are hitting you right between the eyes. I mean, looking at bills and seeing percentages thrown in and optional this and that when it's really not optional. Yeah, those make it more than apparent. But I think as long as people keep paying, which to some extent has taken place, Phil, because of the increase in wage growth that's going on, they're probably not going to back off.
Right. So, but that would be one of my points, Dan, is that people will stop spending, and I hate to use this word, when they don't have a job, right? And this is exactly what the Fed is doing, but not saying. Because you don't raise rates and increase unemployment, the natural reaction is that there's going to be less people employed, and therefore the spending comes down. I mean, nobody wants to talk about it, but you can't defy gravity.
No. Well, the term that's being used now, Phil, is demand destruction, which who would have ever thought that would have crept into our vernacular? Demand destruction. So it's going to take destroying demand in order to back off inflation, because it's just not happening otherwise. And again, because of this wage growth. So completely unprecedented, and something that obviously is going to reflect in the Fed having a much heavier hand in increasing rates. And that, of course, is what not only spooked, but totally corrected the markets today.
We don't also talk about this, but you as a company, Dan, you head up a lot of investment banking deals, right? A lot of them are international, but you also have a lot of domestic folks that you work with as well. These are all CEOs. They're raising money from you to invest in their businesses to expand. So you have a very unique insight into all this. Tell me what these CEOs and CFOs are telling you in terms of their planning for 2023, because that would help us think about positioning in terms of the market, right?
Absolutely. They're going ahead unabated. You don't just show up and raise money in the capital markets from one day to the next. It's a process. You got to prepare for it. In the case of an initial public offering, there might be months of audit and legal structuring, and then you start looking at market conditions. So they're building towards an event that's going to take place weeks and months from now. And for the most part, they're not backing off at all. They know they're going to need access to capital. They believe the markets will at some point stabilize. So it's onward and upward, but it is a much more difficult environment to plan in.
Assuming the Fed raises rates, as we all expect, and I might probably ask you how much they will raise rates by, how would that impact companies' ability to raise money?
Well, of course, raising rates makes borrowing money lending money more attractive for investors. So it causes money to move over to that side of the equation and takes money out of equity, which is like permanent capital. So it's obviously going to make the access to permanent capital a little more scarce, not completely off the books, but a little more scarce. So it will certainly adjust it. And what you saw in the markets today was somewhat of a knee-jerk reaction. This isn't going away easily. There's going to be hikes, 3/4 of a point Absolutely. That's probably out there in the relative near term from the Fed. And it's going to happen in some bold and novel ways. I heard the word, Phil, today being used, stomp. We have to stomp on inflation. How are we going to stomp on it?
It's
Like you said, by people losing jobs.
crazy. So I heard the 75 basis points for September. I heard, by the way, another 75 after that. So what's that? That's 150 basis points on top of what we already have, which would essentially, if you and I walked into a bank at the end of the year, we could probably get 5% on a guaranteed CD. At some point, I'm not going to invest a single penny in the market because, you know, the market goes up and down when I can get 5 or 6 or 7% almost guaranteed at a bank. I mean, there's going to be a flight of capital who I guess will benefit conservative people.
You're right. They really will. And there'll be a rush to safety, not because of safety, but as you point out, because the alternative return is that much higher and that much more de-risked. So
Right.
again, it's gonna take money out of circulation. It's going to reduce capital formation. It's certainly going to impact growth, and hopefully it doesn't drive us into a recession.
Dan McClory, we could go on for an hour, and Danuka will kill me if I do that. So appreciate it. Head of China, Boustead Securities. I'll talk to you soon.
Thanks, Phil.